First, here at 4 o'clock, the Federal Reserve has raised interest rates again in an effort to slow inflation. Thank you for joining us this afternoon. It's good to see you. I'm Brian Dorman.
And I'm Shannon Brousseau. The Feds voted today to raise it 3/4 percentage point. News on 6's Jonathan Cooper is live with more on how this could impact your wallet. Jonathan.
Brian and Shannon, this is the third time this year that the Federal Reserve has raised interest rates, and it means that it's going to cost a lot more to get a loan. The Federal Reserve, once again, is raising interest rates to try and slow soaring inflation and consumer prices. This afternoon, the Fed voted to raise rates by 3/4 percentage point, the biggest hike since 1994.
Right now, the Fed is in a very unenviable position.
The increase means Americans will pay more to borrow money. Credit cards, private student loans, new car loans, and mortgages will all go up. Alfredo Madrid is a mortgage loan originator at Supreme Lending in Tulsa.
We're seeing now that same house is costing you a lot more right now than it did a year ago, than it did 6 months ago, than it did 3 months ago.
Madrid says there is a lot of fear in the industry right now. Buyers with a 30-year fixed loan on a $250,000 house, for example, are now paying about $3,600 more per year.
I think that the short-term volatility is due more to that perception than the actual numbers. We're gonna see inflation at some point curbed. Like, we're gonna see it stop going up, and I think things are gonna start to stabilize a little bit.
Despite the rise in interest rates, Madrid thinks it's still a good time to get in the market, with rates still low compared to historical averages in the 1970s and 80s.
I mean, those 3% rates, I mean, I think they're gone.
He says the key is to not panic.
Really stay calm. It's hard to speculate. Like, if you speculate of what could or can't be or what the market is or try to time the market, I think you're gonna lose. I think even those people that bought at those interest rates at 11 and 12%, now they're looking at their equity position and they love it.
Analysts think that the Federal Reserve could raise interest rates again next month. Reporting live in Tulsa, Jonathan Cooper, Oklahoma's Own News on 6.